Welcome back to the channel. My name is Brad, and today we're going to cover things that beat SPY as income funds. If that's what you're interested in, stick around. So my name is Brad, and I've been retired now 8 months, and I look for things that give us that 8% that I can live on in retirement. And we're going to discuss 4 different funds today that apparently beat the market. Well, beat the market as in SPY. And they don't all beat the market, but a combination of them will beat the market. And we'll cover that as we go through. We're going to discuss AMLP, MLPR, MLPX, and MLPD. People always say, hey, Brad, you don't like ELNs, and this is an ELN, so why? Why, Brad? Why? Because that's what I get. I get why. Well, I don't like ELNs such as JEPI because JEPI doesn't tell you who holds the ELN. JEPI does not tell you what their strikes are. So you only assume that they're making the calls because they don't tell you. They used to tell you who used to hold the ELN, but now they do not. Why are they hiding it? Because they put it into a couple banks that almost went out of business. That's right, your money was highly at risk and didn't tell you. Now, this ELN, we know what it is for MLPR. We know what they're holding. We know who holds it. So it is no secret of the ELN. That is why I'm going to say okay. And it's only because they're being fully transparent with it, unlike JP Morgan and JEPI and JEPQ. And if you don't believe me, go out and look at JPI or JPQ, whatever it's called anymore, and go find out who holds those ELNs. And you'll notice that they don't tell you anymore. Extremely dangerous when people start hiding information and are not transparent. So I am going to call them out on their transparency. Like it or not. You can like it. I don't have to like it. And I don't like it, so I don't invest in it. But let's go ahead and talk about these funds. So if I look at AMLP, there is first no K1s on any of these funds. No K1s. Don't know how important that is to everybody, but it is pretty important. That's if you're doing your taxes. And some people, I have to question if they're actually doing their taxes because of the way that they do things. That's a different story for a different day. So they're 401k and IRA eligible. They pay that 7%, just over 7%. And it's going to invest in an MLP, right, which is a master limited partnership. And what they're actually following is the AMZI index. So there's actually an index made up for these funds. One thing to point out is, hey, it's had a 11% year-to-date return, which is pretty good for a master limited partnership. But let's go ahead and look at what they actually hold. What I see is a bunch of limited partnerships. They're all in the United States. They go from anywhere from compression, processing, pipe transportation, marketing and distribution. So there is a wide expansion of things that this fund actually holds, and they hold it for you. But again, no K1s on all this. And personally, I used to have HESM and I really liked it. So basically, I'm getting back into HESM, but this time it is part of a bigger fund that holds it all together for us and has a little bit more diversification than a single master limited partnership. Because as much as I like master limited partnerships, single master limited partnerships have more risk than a basket. And that is the same thing that can be said about stocks and everything else. Something that holds more diversification and more funds is better than just a single. Just pointing it out that it's not as risky as having a single master limited partnership. Why master limited partnerships? Well, master limited partnerships pay a higher income than REITs, than mainstream utilities, the S&P 500. They just naturally pay more than the other indexes or other funds. And this is without having to write a cover call on any of this. This is actually income being generated for you without being capped of a covered call. Now, one of the funds is a covered call, but we'll get to that near the end and we'll talk about it. If I look at total return of AMLP for the 5 years, 380% compared to the S&P, at 146. So sorry for you that want to be into stocks and equities when there's other things out there that can actually produce income that helps you in retirement, that actually beats the S&P 500. Don't say put all your money into it, but you should put a small percentage into maybe a master limited partnership, or at least look into it to see if you fits into your profile. I'm going to say this does fit into my profile, and all 4 funds fit into my profile. I am going to purchase all 4 funds. Yes, that's correct. I'm selling a couple of little ones that I've already told the members, and I am putting the funds into here. And I'm doing that because growth, and it gets me my 8% for my retirement. If I look at a longer term return on investment, we have everything from 20% to 11% for the 5 years. Now, you got to remember, it was right around 2020 under the first administration of our current president that master limited partnerships actually really took off and really went up because of oil and gas. And energy is not going to stop anytime soon. It's not going to happen. And we're just adding some diversification to the total portfolio into other sectors than stocks in the S&P market, especially looking at the market yesterday, actually today, because I'm recording this a day early, really down. These are not down as bad, but they are down, and I got one for a discount. If I look at growth over time, AMLP is doing better growth-wise than ENFR. ENFR is a different fund, but we're only going to compare to AMLP. You can see which one's growing and which one's maintaining. You notice that it's doing very well, continues to grow, continues to pay out those distributions. Now, adding a little risk with this MLPR. This one is going to pay you just over 8%, but it's leveraged 1.5. That's right, it's an ELN. And what you'll see is it's tracking the same underlyings as AMLP, but adding leverage to it. And that's where the difference comes in between the 2 funds. One is non-leveraged, one is leveraged. And I bought a little bit of both because I am going to play that gain. And I got AMLP, and you can see how that has done price-wise over 5 years. It's done very well, and it's paying that forward yield of 7.23 according to Seeking Alpha. And I put that against MLPR, and we look at the difference in gains, and it is significant. And it's paying at 8.36. So you can see why maybe I put a little bit into both of them and play it against each other. Now, long term, MLPR will probably get sold off in profits as it goes up. Not promising anything, not promising any profits whatsoever. It could go to 0. It's not going to go to zero probably, but as it goes up, I am going to take profits and put it into AMLP over time. In between time, I'm going to collect my 8% and be happy about it. So that's how I want to play this out, is as this goes up, maybe every 2%, 3% in gains of MLPR, I'll sell a few shares and then transfer that into AMLP. That's not going to go up as fast to grow that out over time. So you can now see how I'm playing this, because what does this look like on a longer term chart? If I put MLPR and AMLP up against SPY, you can see the difference. You can see it's a significant difference. And that is why I'm playing a little bit of the fence here on this. I want to grab a little bit of capital appreciation, who doesn't with the market being down, and put it into AMLP over time as it gains in appreciation and collect my 8% at the same time. That is how I'm actually playing this, because if I look at a price chart, you can see MLPR is more volatile, but you can also see that it gains in price quicker than everything else. So yes, I am going after a little bit of gameplay of getting into a master limited partnership with leverage so I can actually increase my account a little bit and then sell some shares off slowly but surely. I will not be buying more shares of this. I'm going to take 100% of the distributions and let it ride, and then every 2 or 3% sell a couple shares off until I sell all the shares off. But as I sell them off, I'll be reinvesting those revenues into AMLP as they gain in price. This is for fun video, so it's going to be longer. We're going to talk about MLPX and MLPD. They're kind of sister funds if you want to look at it that way. And I am going to buy them equally by actually weight. Won't be the same share account, but I'm going to try to get it pretty close of putting a few dollars into here to actually build this out. Because when you look at this, MLPD is from Global X and MLPX is from Global X. And what they're doing is MLPD is selling at the money calls on MLPX. So you can see how this plays out. So the bigger question is, Brad, why are you switching to the energy sector? So over the last 20 years, the energy sector has been more volatile and going up in price compared to your information technology. So yeah, Microsoft and Amazon and everything else. So that is why I'm moving into more of the energy sector for a little more diversification. It's going to be placed under my alternatives. Trying to build out my alternatives besides Bitcoin and things like that. Building that out back to that really alternatives energy sector. If I look at MLPX and I look at MLPD, you can see that, hey, these actually have lower total expense ratios of 0.45 and 0.6 compared to other funds that we may get into with higher yields. These actually have lower expense ratios than other funds that we get ourselves into. So we really like that. MLPD pays on a monthly and MLPX pays on a quarterly. Should know that they're going to be slightly different. Also notice that MLPX has 24 holdings, where MLPD has 2. Let's face it, they hold MLPX and then sell call options against it. So there's your 2 holdings that it's holding. Not very clever of them to put that up there, but hey, that is what they're doing. If I look at Global X and their distributions, this is going to come in right around that 11 to 12% in 12-month trailing distribution. And you're going to have some price appreciation over time with this fund. So MLPD, like I tried to explain before, really is just selling call options on the other fund and holding it and giving you a little more yield, but you're giving up all the upside. Well, almost all the upside, because it's not exactly at the money. I'm going to show you a price chart of how that actually has worked out. And the bigger one with that is when you should actually buy it and not buy it. And that is, again, something for you to realize and have to go to the site to figure out if it's a good day to buy or not a good day to buy. But Brad, why am I doing this? If I hold these equally weighted, let's bring up the chart here. MLPD pays right around 11.9%. MLPX pays right at 4.24%. Here's the deal. If you combine them together, you get magically about 8%, which is what I'm trying to live on. So you can see exactly how I played this out. I'm holding both. One for more capital appreciation, which is MLPX, compared to MLPD, which really is not going to have capital appreciation. It's not going to have capital appreciation. If you think it is, wrong fund. MLPX will have capital appreciation. So when we look at some of the underlyings from Global X on MLPX, you can see that there's master limited partnerships, and you can see other single stocks, Kinder Morgan and other ones that are out there that they own. And I'm going to say it's another diversification play into the energy sector. And I think energy should be maybe a small portion of your portfolio. I mean, there's other funds out there that's in infrastructure and other things. I'm just going this direction because kind of like there's master limited partnerships that are out there. So on a price chart, MLPX crushes SPY. It just does. I mean, it's not even close. It just crushes SPY. Right? But price wise, on the price change of MLPX, it does, again, crushes SPY. It's just a total crush of SPY. So anybody that just wants to hold SPY and retire, you might be a little bit disappointed. If I look at this also from my total returns, ever since they had MLPD, you can see total return wise, MLPD does not do as well as MLPX, and that's because of the price appreciation. But if you hold the two together, you're going to be able to beat SPY over time and collect your 8%. And that is what I'm going for. Because when I look at price and price of MLPD, you have to realize it's not ever going to have a whole lot of price appreciation. It's not. The selling what they called at the money via VWAP, which is an average weighted of the fund. And let's just not get into it. So it's going to be slightly out of the money, but it's really at the money when you actually do the weighting. And it's a little more complicated than just a regular cover call, but let's just figure the way that they're doing this is it's a covered call, and what they're trying to do is at the money being an equal weighting of the fund or the VWAP, right? So just keep that in mind that, hey, this might be $1 out of the money compared to normal being right at the money. And the best part of this is you can go to their website and see what their strike price is. You do not want to buy MLPD when price is above the strike price. You want to wait. Lucky for me, because of the whole market downturn, I was able to get MLPD below the strike price of $64. So basically, I have upside appreciation available to me. So keep that in mind. When you buy this stock, you want to make sure that you're buying it when it's selling below the strike price, and you can literally go to their website. And I'm going to leave the links to their websites down below so you can actually go to their sites and explore this yourself. So at the end of the day, I'm buying some energy funds that outpace the S&P 500. Appears to be what's right for me. They're not huge payers. They're really getting that 8% right around there, 7 to 8. And I want to be happy with that. Really am, especially with capital appreciation that happens over time. Because let's face it, not all these cover calls have great capital appreciation. You can appreciate buying these at a slight discount and trying to grow out the energy sector of my funds in retirement. So hopefully you enjoyed this content. Please give me a like and a thumbs up down below. And if you have any funds you want me to look at, list them down below. Although my list is pretty long, about 500 funds, more or less, and more come out every single day. I'm trying to eliminate doing reviews of anything that's less than 3 months old. I need at least 3 months so we can see some distributions. I've done videos before when they first launch because they looked interesting, but at the end of the day, after 3 months, we can start to tell what's going on with the fund compared to day of launch. So keep that in mind, and until next time, God bless.